Well, Fed Chair Janet Yellen spoke on Capitol Hill today to brief lawmakers about the economy. And she says there are encouraging signs things are improving after what was a fairly rough winter. Now, if things stay on track, Yellen says it's likely the Fed will start raising interest rates later this year, but they'll likely remain at very low levels for quite some time after that first increase.
If the Fed waits longer than currently forecast to start raising rates, will that mean a steeper path of rate increases?
Well, if we wait longer, it certainly could mean that when we begin to raise rates, we might have to do so more rapidly. So an advantage to beginning a little bit earlier is that we might have a more gradual path of rate increases. As I indicated, the entire path of rate increases does matter. There are many reasons why the committee judges in effect that an appropriate path of rate increases is likely to be gradual. But given that we have been at zero for over 6 years, it's been a long time since we've raised rates. Doing so when we finally begin in a deliberate and gradual way, looking at what the impact of those decisions are on the economy, strikes me as a prudent approach to take.
Liz Peek is columnist with the FiscalTimes.com. Oh, you know, she pointed out we've been a long time at zero, so who's going to be surprised that rates at some point in the near future are probably going to go up?
Well, investors might be surprised because they have not factored in a rate increase in September, and that's what she left the door open for today. Yellen is dealing with the fact that we haven't had a rate increase since 2006. Everyone knows we need to get back to what she calls normalized monetary policy. And we do, because zero interest rates is not the sign of a healthy economy. But once again, the economy is sputtering. We had a bad retail sales number for June, down from May. Also, manufacturing has been stagnant for 2 months. All these things kind of lead into a conversation about what are the headwinds. The headwinds are obviously a very strong dollar, which is hurting our manufacturing sector. China, where they just reported 7% growth, but nobody believes it because all the other indicators are that China really is having some problems right now. So Yellen is trying to thread the needle between getting ready for an interest rate hike, but doing it in such a gradual, gentle way that it won't derail what is still very sluggish growth, 2% kind of growth numbers.
You just mentioned China. Europe is dealing with the Greece problem.
Yeah.
And I've heard strong arguments about Syria and the refugee crisis and the impact that's having on the Middle East and Turkey as well, which is in the Eurozone. So when you're talking about foreign issues, do they have an impact on the Fed's policy when it comes to interest rate?
They definitely do. Again, it's hurting our companies that they're having a hard time exporting. The strong dollar has made our goods much more expensive around the world, so that's hurting international companies based here in the U.S. And also, interestingly, one of Yellen's guideposts is keeping inflation low. The strong dollar keeps inflation low because all the imports that we're buying, cars from Germany, et cetera, are basically not going up in price. So it's a little harder for her to argue that we have to raise rates when, after all, employment continues to get near full employment levels. And there's no inflation. So people might say, well, wait, what's the rush? The rush is that this is an unnatural kind of monetary situation. It cannot be allowed to go on forever.
I'm not a monetary policy expert by any stretch of the imagination, but I know that we started to see the Fed lowering the interest rate when the economy was imploding, when you had people losing the house. There was a rash of foreclosures across the nation. We've seen the housing market rebound. We've seen the stock market rebound. And as you pointed out, unemployment. Do you think that there needs to be rules in place? A lot of people are wondering, should the Fed put in rules for when they can raise rates?
Sort of automatic triggers, you mean?
Yeah.
I think that takes away the ability of the Fed to fine-tune. Some people would argue the Fed has never been successful fine-tuning. And if you go back and actually look at Fed expectations for the economy, they've been wrong, I think, for 23 years or some number like that. I mean, it's staggering. But, you know, like everyone else, they have a hard time really forecasting all these exogenous events. Who knows whether the Greek parliament, in fact, is going to ratify this new agreement if Europe goes into another sort of convulsion and European demand for American goods gets clobbered once again? these are problematic things, and obviously Janet Yellen doesn't control it. But I think the big issue for her is probably wages, the fact that wages aren't going up. I think it's going to be very hard to raise interest rates very much if the American worker is not doing well. And so far, as we all know, he really isn't doing well.
You might see a big,
or she.
Big push on the part of mortgage companies to encourage people to go out, if they've not already refinanced their mortgages, to do it now before the rates go up again.
Well, yeah, a lot of people have.
Yeah,
I mean, that's been a big business. Yeah.
I got to ask you about oil here, because on the news yesterday of the Iran deal, we saw the oil industry, the oil price per barrel falling again on the expectation that Iran will start exporting oil, that you'll see more product on the market. What are we likely to see in this industry?
Well, interestingly, prices came down and then they kind of stabilized, probably at a higher rate. I think they actually ended up for the day because people were kind of beginning to say, all right, wait a minute, there is 1 million barrels a day. People think of Iranian production that can come on, but it's not going to be overnight. It's going to take some investment. It's going to be over the course of a year or so. Mind you, it's a big number for an already glutted market. But I think the realists are saying, look, this industry in Iran has been allowed to be starved, really, of technology and investment for a long time. So it's going to be a while before the surge comes from Iran.
It's odd the way, though, that affects not only gas prices in this nation, but car buying as well. I mean, for so long we saw people trying to buy more fuel-efficient vehicles or going green with hybrid vehicles, and all of a sudden gas prices went really low, and sales of SUVs that are the gas guzzlers went way up.
Immediately. Yeah. I mean, there really wasn't even a pause. It was amazing.
Like gas prices are never going up again. I'm going to go get my Escalade right now.
And guess what? Those people turned out to be right, because, in fact, the oil price is about half of what it was when they all started buying their SUVs.
I guess it depends on how long they keep those SUVs.
Yeah, but right now, probably the pressure is more on the downside than the upside on oil prices.
Liz, so great to talk to you. Thank you
Very
so much for
enjoyed
coming in
it.
and sharing your experience.
Thank you for having me.